Hello, everyone. Thanks for joining Joint Custody, the Digital Assets Dialogue. I'm Benjamin Duve, former central banker, banking executives, and current global head of partnerships at GK8 by Galaxy, part of Galaxy Digital. And thank you so much, Zahid, from joining us. Maybe you can do a quick introduction of yourself and then already answer the key question I think everybody will be asking. How did you get into crypto and digital assets?
Great. Thanks, Ben. Thank you for having me here. Great seeing you at lunch yesterday. Zahid Mustafa. I head our digital custody and cash product development efforts based out of Singapore, playing this global role. More importantly, to Ben's point, like how did I get into crypto? Well, back in 2021, I was working in global markets on a number of risk and regulatory initiatives, including the likes of MiFID II. And we had just set up State Street Digital back in 2021. And so one of the very senior execs who ran global markets, I reached out to them and I said, hey, I've heard State Street Digital just has been set up. Could I play a role? And I know nothing about digital. I've never been in this space. And she said at the time that, Zahid, given what you've done, you can work during the bad times with risk and regulatory remediation initiatives. You're the right person to kind of play a role in digital because you'll be there during the good times and you'll be there during the bad times. So I started having the opportunity to work with some senior execs who were in State Street Digital at the time and worked on executing, or at least at the time, doing a lot of vendor assessments at the time, which went on for 6 months. And to behold, I'm here and I'm now responsible for the execution and implementation. So just be careful what you ask for. You'll actually have to do the end-to-end implementation nonetheless.
Yeah, and you do so, and we see State Street actually offering services. So you did a good job, right? I don't know, but very interesting. I think as you describe it, I think I get the same question a lot of times. How did you get in? I think it's these unique opportunities within your organization where you're able to step up, maybe actually do extra work, right? Or you ask for that extra work, and that's then oftentimes a path towards digital assets, right? I fully agree. And I mean, at State Street, that's not a small role to play in the industry for sure. So, getting into the next question, right? What do you think it means for the industry that one of the largest custodian is going live with more and more digital assets, initiatives, products, from your personal perspective?
Yeah, again, from a personal perspective, if you just look at where the market is with crypto ETFs and ETPs, close to about $170 odd billion, you would notice that most of those crypto digitally native custodians are coming in from a digitally native space, right? And what the big banks are looking for and what our clients are looking for, at least in my personal opinion, is having an incumbent who, one, brings together 3 decades or so of safekeeping and safeguarding responsibility and accountability in terms of how we look at our vendors, how we evaluate the risk, how do we ensure the governance and controls meets the needs of how we safekeep $46 trillion worth of assets today. And that's what having a State Street does by ensuring that we bring the same risk principles, the same principles that our clients expect of us to the journey. And so we're pretty excited in kind of giving you a sense of like where that landscape is evolving.
So if I ask a follow-up to that, so basically by having all of these check marks to basically open up the asset class for a lot of players who would feel uncomfortable not using a player like State Street. Is that a good analogy towards your share or your contribution to the digital assets ecosystem?
Ben, that's actually a great observation. I mean, we've been on round panels with a lot of different clients, and one of the things that keeps coming up, and whether it's tokenizing a fund or doing, or custodying a bond, one of the questions that keep coming up is that clients are like, if we were at a board meeting and we had to present that, hey, we're dealing with XYZ crypto custodian, but if the name was actually we're dealing with State Street, a lot of those board conversations will go a lot smoother because we actually manage $1 trillion worth of their assets today. And so absolutely having an incumbent there clients want to see their traditional analog assets, they want to see their tokenized assets, they want to see all different forms, and they expect the same level of rigor and commitment that State Street brings to its clients, in my personal opinion.
So being from a more crypto background currently at digital assets, so having a little new vantage point also for me there. What do you offer in crypto currently?
Yeah, a great question. So, as you know, we provide a lot of different services in the back office, ranging from fund accounting and administration. So we basically today provide fund accounting and admin for some of the largest hedge funds who decide to hold crypto assets in their portfolios. We obviously at this stage also have a lot of issuers that we support with their spot Bitcoin and crypto ETFs and ETPs, where we connect to third-party custodians. And so we do the due diligence and we do the fund accounting and admin in that. And so you could already see we are live in crypto capabilities from a fund accounting and admin, both for hedge funds and ETFs and ETPs. But if you take that further, we're also now building out capabilities that go beyond just cryptocurrencies, which I'm more than happy to discuss.
Yeah, because that would be now first. I think for people listening in, the role State Street plays in ETFs and ETPs is not to be underestimated. Also with SSGA being part of State Street, I think that's always important to keep in mind because it sounds like we do some admin stuff, but that's a game changer because you enable a lot of the key industry players in those areas. So moving a little bit back more to your custody role, custody perspective, your traditional role, what do you hear from the large buy side institutional players about these different opportunities you presented and we just discussed?
Right. I'm just, again, just thinking out loud from
Yeah,
my vantage point, in my opinion, like what we've seen, and you just don't need to look too far.
yeah,
If you look at the markets in crypto, in tokenized assets today, you've got about $30 billion of tokenized assets on public chains. If you now look at what the top five custodians hold together, they hold about $322 trillion of traditional analog assets. So what our clients care about is like, yes, it's great that you want to get into digitally native asset classes of 30 billion and get in tokenized money market funds, which are purely digitally native, which you can see with the likes of Biddle, Benji, Fidelity, and others. But what clients really want to be able to see is that they've got traditional portfolios of funds and securities. They want to see how do you bring those physical off-chain assets onto the blockchain that gives you the operational benefits, that gives you the benefits of being able to reduce turn times with respect to how you hold those assets, how you protect those assets. And so we've seen use cases that our clients are really interested in my at least personal vantage point, is that if you think about what happened during the gilt crisis, when the mini budget happened in the UK, you saw a significant number of money market fund redemptions, right, into cash to basically pay variation margin for OTC exposure. But now if you take that back and you look at, all right, there are traditional buy sides with huge LDI exposure. One of the benefits that tokenization of at least funds brings is that instead of having to redeem out of an existing money market fund back into cash, especially during stress market events, you now have the opportunity to tokenize those fund units that represent ownership and that moves seamlessly on the blockchain between you and the counterparty, as opposed to you having to redeem out of that traditional fund structure. And so we're starting to see a global demand for not only distribution of funds to new market segments like crypto natives, but you also see at the same time, which is where you have a significant portion of your traditional funds which the big custodians hold, how you could use that as collateral for uncleared derivatives, and then eventually into things like repo or what have you.
the collateral play is a big play, right? I think the more I see discussions, and I think I always try to phrase it, and maybe have a perspective on it as well, to phrase it the bigger the revenue opportunity or disruptiveness and negative revenue impact or balance sheet impact of the current ecosystem is to an area, the more likely you see the innovation around it because it's just such a great opportunity. And I think collateral where you need collateral around the globe instantly deployed um, to preserve balance sheet, to efficiently use your liquidity across organization, for example. I mean, that's ripe for digital innovation because I mean, T plus two doesn't really cut it when you want to move a collateral. So, any perspective on that from your side? I mean, you touched on that point now, and I think it's a very interesting one.
Ben, I echo the sentiments, and I will go back to this. Like everyone talks about um, atomic settlement, but the answer is not about atomic settlement, it's about precision-based settlement, right? So imagine now not actually having to hold that collateral overnight. And depending on if you were potentially using stable coins where you don't actually earn interest, imagine you now actually have the ability to hold the collateral for a precise period for the amount of time that you need so that both the collateral buyer and the collateral receiver, at least I'm looking at this on an intraday repo perspective, know exactly when they're going to provide that collateral. They get to optimize their treasury. They get to optimize the collateral that they need. And they are able to expand on that because you could use different forms of collateral. Tokenized money market funds as an eligible collateral type are being looked at in markets. Stable coins under the Global Markets Advisory Committee are now being considered opportunities to be used as collateral. So it's about precision based usage of collateral, which is far more lucrative than the concept of like atomic settlement.
So if we now take a step back and we talked about many different opportunities, right? In that context, what new role could a global custodian like State Street, so I'm not asking you for the State Street perspective, but your perspective, what it could look like for a global custodian um, take on as new roles, but also which current roles could be under threat?
Yeah, no, great question. Again, in my personal opinion, and just looking at this from a vantage point as I've looked at the markets evolve, I think one of the key areas that any custodian in this matter should be thinking about is that how do you avoid barriers to entry? Because there are no barriers to entry, right? You can see exchanges getting into the landscape of providing trading venues as well as digital securities depository services. You can see banks who are now trying to play the role of a digital securities depository, and so almost remove the CSD out of the equation. You have CSDs who have the opportunity to now play the role of it's the CSD, but also the custody, so that they can provide the end to end. And so the reality is, like the custodian of the future, and at least in my personal opinion, is almost a what I would call a global synchronization operator. And by playing the role of a global synchronization operator, you provide different capabilities. You obviously provide the tokenization of funds and securities and cash. You provide the role of being able to connect into different ecosystem providers, whether that's from a KYC AML perspective, or whether that's from a data perspective, or whether that's purely from a blockchain connectivity perspective, where the assets may live on very different third-party digital asset platforms, and the cash might live at a central bank, the cash might live in the terms of commercial bank money in tokenized form, or it could be stable coins. You want to be able to have a partner who can have open architecture that can bring issuers and investors together with the search of one fundamental thing, which is yield, and to do that in a manner that safe keeps and safeguards. So I believe the future role of a custodian is to be a synchronization operator that brings together all the different roles of being able to provide transfer agency, fund accounting admin, custody, cash, settlement, as well as synchronizing across different payment providers. Because I do not believe, in my personal opinion, everything happens on one chain. They're going to have multi-chain ecosystems where the asset could be on one chain, the cash could be on different chain. And having a synchronization operator who can bring those different connectivity points becomes extremely valuable.
So basically, you currently plug into the CSDs, you will also plug into the different chains, right? As a client of State Street, for example, of a global custodian, you would suddenly be able to access the CSDs, all the different chains. Then you would have the cash account you have with your provider, but also the stablecoin accounts you would have with your provider, and basically State Street is the hub or a global custodian. Maybe let's make it more neutral, right? Because then it's difficult to discuss the State Street strategy for the next 5 years, but it's an opinion, right? So in your opinion, it's more the global custodian has this orchestrating role. It does have today, right? To be quite honest, it just got much more operational heavy in the past because the traditional world is very operationally heavy, but the role is the same. It might need less manual intervention, it's more automatic, more AI enabled, all these different topics. Is that the way you see it?
Yeah, Ben, absolutely. And again, in my personal opinion, without getting
Yeah.
into State Street's roadmap, the way I see it is you have different revenue streams that provide clients the capability of what they would want to see today. If a client wants to invest in a traditional bond or a traditional security, and they now want to have exposure to a tokenized version of a fund or a security or bond, and they want to settle using either commercial paper or stable coins or use their accounts at a central bank, they want to see a provider who can kind of bring together all those different roles so that they can get a unified value proposition through the life cycle of their end-to-end product life cycle. And that's what clients are looking for. So at least in my opinion, you could provide a full value service or you could provide modular services depending on which part of the ecosystem your client needs help in. And so I think that's what I would, in my personal opinion, the future custodians of this world play what I would call an expanded horizontal role, but an also a very deep vertical role. And that's what creates the open architecture so that the entire ecosystem participants, depending on which part of the value chain you are, a global custodian of the future can provide those capabilities.
But look, it's the I let's say I also worked at a global custodian. That's a dream value proposition of a global custodian, and I think yes, I think it's one of the future scenarios. I fully agree, right? I think it will be very competitive, right? One, because if what you describe, how many of those do you need, right? You're one of the top ones, so you might be more protected, but it might be very difficult for others who are not as global, as large, able to invest. So I think it might lead to, less custody players, not more. Just could be an opinion, but I do see this threat, as you mentioned before, from CSDs, from other in the value chain. This going up, going down the value chain. I mean, who orchestrates? I always ask the question, who orchestrates, right? And one of the question is, do you need the orchestration from a global custodian or is it technological layer you can buy that does that orchestration for you? It's a very interesting discussion. I mean, we had an hour lunch, which was almost too short to discuss all these questions. I think we can get all the details here, but maybe to keep it concise, I think that's a great answer for people to get more into that mindset. Let me ask a new question on a little different one, more State Street specific minded. So State Street seems to have a digital setup in digital than others. Maybe you can expand a little bit on it because I think it's an interesting story for people who are interested in organizational learning and the journey of digital assets within these large players. State Street is unique. How would you describe it, and what is it about?
Yeah, absolutely, Ben. I've had the opportunity to be as part of State Street Digital since 2021, and just like other banks and institutions, there were different to target operating models, right? But there are other institutions who decide to, hive out and create a separate legal entity, which is removed from the mothership, and you're able to run digital in that fashion, subject to your own systems, what have you. You can then do it within a bank and create a separate division and do it. But again, you're not in the business. And so you're having different conversations in terms of competing priorities and interests. But where we've really struck the balance, and which is what, at least in my personal opinion, our clients appreciate, is that we are embedded in the business, right? So we are part of custody, digital, and fund services. And when you're embedded in the business, and as I mentioned earlier, the top five custodians manage $322 trillion worth of funds and securities. You have to think about the life cycle events end to end for components that are off chain and components that are on chain, because we believe, at least in my personal opinion, that we're going to be in this hybrid ecosystem for the next decade or so. And clients want to be able to see their traditional analog assets, their tokenized versions of those assets in a seamless reporting end to end, so that the whole concept of same risk, same control, same regulations apply for off-chain components, and then you think about what are the deltas in terms of risk related controls that you need to consider for your on-chain. At least it's been my pleasure working with our colleagues across fund accounting, fund admin, digital transfer agency, custody, and cash across the entire core franchise of State Street, because we're then able to bring together different client propositions, the life cycle of existing systems, how could blockchain transform and create existing operational efficiencies? How do we bring seamless reporting to our clients through a unified, seamless data architecture that goes end to end across all life cycle events? So we've done the tough miles first, in my personal opinion, and I think that's what clients are looking for.
So if I think of it from a different angle, you sit at that leadership table to input from a digital perspective, but also understand the needs and requirements of your traditional peers, so that there's this opportunity to really work together rather than be in silos, and then maybe one doesn't influence the other enough, or I mean, being in digital, you might be forgotten about sometimes. You just mentioned the numbers earlier, what the size difference is. So it's a super interesting setup. So as I said, we met in Singapore. I'm here just for a token. So big crypto conference. You are actually now living here, right? And you now you sit in very large organization. You moved within that organization in the same role into a new region, right? So I think you have a very unique vantage point, right? So AGI has been an early mover in crypto and digital assets, right? With notable institutional and regulatory initiatives. How would you personally describe the current energy and momentum around this space in Singapore? Maybe how to compare that to London, and also from the US angle, you have State Street is headquartered in the US. Maybe give us a little zoom out, the Zahid long in the industry from one of the largest players perspective into that.
Yeah, no, Ben, that's a really interesting question. And again, I'm just looking at it from my personal point of view, but more importantly, what Singapore brings is they have been at the forefront of digital innovation, like with the leaderships of the Ministry Authority of Singapore. It enables the capabilities on a day-to-day basis. So just for someone who's new to Singapore, the first few weeks in, I got something called a SingPass, which is a digital identity on your phone, and that digital identity is recorded through everything that you transact through, whether that's your investments, your payroll, the opportunities you take with respect to what kinds of investments, and having the security protocols built into a digital identity, which can then reflect the types of choices that you make in terms of personalized, customized portfolios. Like Singapore is already there, right? So this whole concept of how do you take digital identity, what kind of tailored services could you provide based on your persona type, like having the ability to work with what the Singaporean market and has done in terms of innovation, it starts to show what the appetite is. And as you know, we're in Token 2049 this week, Ben. It's going to be a significant effort, probably one of the biggest efforts on the globe. We're going to have the Singapore FinTech Festival later this year, and so all our clients are here. They are global 360 clients, so you could think about, we deal with some of the biggest buy side managers, asset owners, hedge funds, pension funds, sovereign wealth funds, what have you. And at the end of the day, they want a global 360 account managed in the way that their voices and their interests are heard. And so having the opportunity to meet with clients in region provides me a really intricate perspective on what their needs are and how do we influence our global product roadmap, in my opinion, right? Because everything we do is based on the needs of customers. So the client's voice of the customer is absolutely critical into our roadmap. It's extremely dynamic, based on client needs, regulatory needs, operational needs, technological needs, what have you. and being able to service a client value proposition across the pond is what delivers an end-to-end value chain, which is of value. So I feel like having the opportunity to be in Singapore has been great. It gives me the opportunity to lose some weight outside of running because it gets really hot here. So
Well, we had
it's been
salad
great.
for lunch. What can I say,
We had
right?
salad.
We
We
had
had
salad
salad
for
for lunch.
lunch.
There you
Yeah.
go. We had salad for lunch.
Uh, and to dive a little bit deeper into the differences, right? So, what's your personal experience? You just mentioned the digital identity. What's your personal experience there, maybe? And then let's see, is there an institutional perspective that might differ or not?
Yeah, I mean, on the personal front, like I just mentioned, you on your personal cell phone, you have an app by the Ministry of Manpower, which basically has a digital identity of who you are, how long you're able to work, which investments you partake in, and you could go to any shop, any investment, and just use your digital identity. So, just personal reason, I created an account with a for my phone just 2 weeks ago. I literally had to go there, show them my digital pass. All my details were automatically transposed through the verification process. The entire process, Ben, took 2 minutes. I opened up a bank account with DBS, a local bank. They looked at my Sync Pass, looked at my records, and within 5 minutes, a new bank account was opened because they had all my verification of employment, all the relevant details associated with it. So you can just take this to a step forward. If you apply the same concept of digital identity, which happens at a level, at an individual level, and you apply it at a fund level, and you then think about the end investors who are going to apply into that fund, now you have on-chain digital identity credentials for that particular target fund, for that particular investor, depending on what kind of duration risk that they want to take on. And then if you're now trying to cross-sell this on a particular marketplace, you now not only have the on-chain compliance credentials, which are absolutely important, as I spoke about, but you have the on-chain personal persona of the actual investor and what kind of risk are they willing to take. And then you can have tailored portfolios that you can then be allocated to those investors. So it's at least in my personal opinion, everything is moving towards a strategy of personalization for clients, and that kind of moves beyond just asset managers, asset owners, hedge funds, what have you. You now move into the wealth space where you can see about $60 trillion of wealth transition from baby boomers into this generation of where we are, and they're just going to be looking at our apps. They want a launch tap. They want their identification just the way I've just described. And they want their issuers to be able to provide tailored services that meets their risk reward threshold. And so that's where, at least in my personal opinion, the future is going.
And they really seem to be very open towards innovation. That's I've been to Korea, now I'm here in Singapore. It's like a lot of these little things are just already digitized for everyone, right? And I think that seems to be it's not like a niche user for certain digital products. I think that's all age groups now embrace this digital change much more than I see in Europe. And well, I'm not living currently in the US. I'm traveling a lot to New York, which might be a little different than the rest. But I see that. But do the institutional investors, is there a difference? Or would you say they actually they have a global perspective, so that the difference might be more on a personal level than on an institutional level?
Yeah, a very good point, Ben. Like investors and clients are looking at this, at least in my personal opinion, and I'm looking at just funds as an example, right? Like you could have a VCC capital structure in Singapore, but you want to be able to create sub funds under that VCC structure, and you could do that using a smart contract, right? Whether it's ERC 1400 or whatever your choice is. You could be in Luxembourg and you could be creating a tokenized master fund. You could be in the US and still having a digital share class for a traditional fund. And so what we've seen, at least from clients, are that these are global 360 clients and they have needs which need to transcend. So the way you build an operating model is that you have to think about, at least in my opinion, an operating model that transcends and is almost jurisdictional agnostic, which covers all these different nuances. And then you start to think about what are the jurisdiction and legal carve outs that you have to think about when you're in this particular region. And so clients expect that of us. So whether we're talking to their franchise in Singapore, they know we're having the same conversations with them in the US, or we're having the same conversations with them in Europe. And they want to be able to see how State Street, at least in my opinion, can manage the complexity across jurisdictions. And so, how you build your operating model for digital becomes absolutely critical in being able to service those very bespoke client needs in region.
So I think having this global perspective from a global custodian and from you, Zahid, I think it's a perfect final point we make in this podcast. Thanks for being here. Thanks for the very open discussion, giving your personal opinions, and also thank you for everyone to listen in, and make sure you continue to subscribe and join the next podcast around it. And Zahid, see you around Singapore this week for sure.
Same here. Thank you. Have a good one.